Hi there, I'm Matt Ishbia, President and CEO of UWM, and this is 3 points. First point, title insurance and other closing costs. So we know costs across the whole world have gone up with inflation, a lot of everything, but the mortgage industry costs have gone up more than others. It's been a noticeable increase. Of course, we can talk about credit, where it's gone up 300-400%, crazy numbers, right? And it's actually negatively impacting consumers on the lower end because a $200,000 house paying $100 for a credit report versus a $1 million house paying $100 for a credit report is a big difference. And so it's becoming impactful to a lot of people. Now, title's another one. President Biden actually talked about his address to the United States about title waivers, or way to save $1,000, $1,500 for a title. Like, why do borrowers need lender title policy? What is the cost for it? What are they really getting for that $1,500 or $2,000, right? It's going to be disrupted. Title will be disrupted. Credit's being disrupted. There's going to be things that are going to change in this industry. MI. We've talked about MI. We've talked about appraisal. There's a lot of things that are being pushed around and disrupted. You have to be aware of these things. At the end of the day, it's all about the consumer. What's best for the consumer? And if the consumer's paying $2,000 for title insurance and they're not really getting anything for it, why would we keep doing that? So there's alternatives that are out there. The GSEs are looking at different pilots, different ways to save the consumer money, whether it's credit, whether it's title, whether it's other things. And so be aware. There's a lot of things going to change over the next 12, 18, 24 months around these things. And if the only way they're in business is because they've always been in business rather than actually providing a value to the consumer, watch out, because disruption usually comes then. Second point, mortgage broker market share. So mortgage broker market share at 24.3% in the fourth quarter of 2023, which is the highest in 15 years. Mortgage brokers, loan officers in the mortgage are growing, right? Consumers are getting better deals because they're saving over $9,000 by working with a mortgage broker. This is happening. It was down as low as 12, 13%. Now it's at 24.3%. But the best news, there's so much upside to come. Consumers are getting the benefit. LOs are growing. More LOs are joining the broker channel because they can save the consumer money and still make a great living, if not more money as a mortgage broker. All these things are happening. So it's so awesome to see. We know we're all doing right by consumers, and mortgage brokers are growing. 24.3% of the market in the fourth quarter, and it will continue to grow as they continue to do great things for consumers and as LOs continue to join the mortgage broker channel. Third point, new structure for buyers real estate agents. So we know about the NAR settlement by now. We've seen what's going to happen with the real estate agent commissions and how it will modify and what this means going forward. But here's my high level. First off, change creates opportunity. The best will rise to the top and continue to do great things and continue to grow. Second thing is it's opportunity for LOs to partner, help the real estate agents. We've all had LO comp change in our industry. We've seen how that changes. How do you take advantage of it in a positive way? Do good by consumers, but grow your business. We're going to see that with a lot of the top real estate agents in the country. And the third thing is it's really just taken out all the things and made it more transparent. It used to be you just have a seller selling a house and 6%, 3 goes to the buyer, 3 goes to... Now the buyer agent is going to actually talk to the consumer prior to, have an agreement with them one-on-one and say, hey, I'm going to charge 3%. Here's what it is. The seller can still pay for it, right? So realize that, it doesn't come a concession. It can still be done in a similar way. However, you have to understand that ahead of time. You have to discuss it. And maybe because you discuss it up front, maybe the consumer will say, I only want to pay 2.5%. So could that push commissions down? Well, when that happens, what do we have to do to help real estate agents continue to succeed? And so it is inevitable. In any industry, technology and changes will make it so commissions and numbers, but don't forget, real estate, the housing values will continue to go up and go up and go up. So if you go from 3 to 2.5% or 2%, will you still be making more money in the future? Absolutely. And so it's mindset, it's understanding that change creates opportunity, and understanding that you can still make the same 3% the exact same way you made it, except you have to disclose it a little differently up front and go through that process. So we're going to see some changes, but I think change creates opportunity. LOs, find out what your partners need. Talk to them about it. See how you can help. And then we're talking with Fannie Mae, Freddie Mac, and what they're going to maybe do to help real estate agents. So there's a lot of things going on. Don't put your head in the sand on it. Understand the rules, understand the changes, understand how you can help and how you can continue to help consumers, real estate agents, and how you can continue to grow your business. Thanks for joining me. I'm Matt Ishbia, President and CEO of UWM, and that was 3 points.